Hello ladies and gentlemen, my name is Greg Mikulowski from ForexLive.com. Good morning. Today's date is August 2nd, 2022. I want to take a look at some of the technicals that are driving the Forex market today. From a fundamental standpoint, Nancy Pelosi is on her way to Taiwan, which is increasing tensions, causing U.S. stocks to dip to the downside. Oil prices are a little changed, a little bit higher after yesterday's sharp fall to the downside. We're seeing U.S. interest rates a little bit lower as well as a flight to safety. The Aussie dollar, the Reserve Bank of Australia raised rates by 50 basis points, but they did say that they're more data dependent going forward. That led to a sharp fall in that currency pair. So let's get going from a technical perspective now by starting off by taking a look at the euro versus US dollar. And as you can see, that went over like a lead balloon. What I'm talking about is the break of the 50% retracement finally. This is of the move down from we all know this story, June 27th to July 14th. The price moved above the 50% at 1.02829, but momentum could not be sustained, and the price quickly started to move down to the downside. There was a little battle going on between this swing high right here and the 50% retracement level, but the sellers won out overall on this bar right here. Started to see more momentum to the downside. And as you can see, we've moved all the way back down to the 100-hour moving average. That blue line represents the 100-hour moving average, and the price is just moved down to that level and testing it. Just below that is the 200-hour moving average. That 200-hour moving average comes in at 1.0200. The 100 comes in at 1.209. So in between those two levels is our next support, and it's going to be a barometer for the buyers and sellers. If the price can bounce off of that level, then okay, we're sort of at this. It's similar to selling against 50% retracement. If the price moves below that level, it tilts the bias more to the downside. That's the euro versus US dollar. Let's take a look at the dollar versus yen. And we saw another move to the downside here in the dollar versus yen. Let's see how many days in a row this is. That's 1 day, 2 day, 3 day, 4th day in a row to the downside for the dollar versus yen. And as you can see, we got closer to the 100-day moving average. That 100-day moving average currently comes in at 130.234. The low price today came in at 130.39 before we saw a modest bounce to the upside. Now I'm going to go to the daily chart and show you this area right here between 131.24 and 131.483. I had to go there to see it. 131.483. That's in between the 61.8% retracement of this move to the upside. That level corresponds with a swing high right here, swing high right here, and a swing low right here. Again, in between the 61.8% retracement. And so far, that area, it is this area right here in between these two lines right here, has been able to hold resistance on the top side. If the price can stay below that level, we're going to continue to see the battle go on between this area right here and the 100-day moving average on the downside. Of course, the 100-day moving average is a key support level that, if broken, would increase the bearish bias. Let's take a look at the sterling versus US dollar. We'll start taking a look at the hourly chart. And what we saw in yesterday's trade was a move again to a new high here. That high price got close. Actually moved above, just above this swing high going back in time all the way to June 28th, just above that level, and the market rotated back to the downside. This swing area here outlined by these two horizontal lines, swing low, swing low, swing low, and then a swing high right here, and then we moved up to it in trading on Friday and found sellers against that level and tried to hold support in the Asian session here, and then fell below that level, increasing the momentum to the downside. We did get close to the 100-hour moving average. It sniffed it, I guess, and another swing area down here, but the price has since bounced back to the upside. We have a positive bias here in the sterling versus US dollar. The 100-hour moving average would be a key barometer. We did fall below it on Friday during the that end of month up and down price action that we saw, which was kind of crazy. So getting below the 100-hour moving average would be a key barometer for that currency pair. Looking at the daily chart, the price is above the 50% retracement of this move, which comes in at 122.127. Watch that level on the downside. That's about where we're trading right now, 122.10. So there's some pressure. Could be some pressure on more momentum below that level in trading today. Let's take a look at the dollar versus Swiss, and this trend line here on the hourly chart did a pretty good job of holding support in the early Asian session. We had early buyers against that level, and the price started to rotate back to the upside. That move back to the upside took the price above this floor area between 0.9494 and 0.9500 thereabouts, and once we moved back above that level, we saw more buyers come in. There is a solid line right here. You see this line here at the 95.32. We have a swing low right here, and then we moved a little below that level here, but to swing low. Then more recently, we've seen a swing low and then swing high here today. So there is some resistance there at the 95.32 level from a swing line standpoint. Also above 60 100-hour moving average. We moved above the 100-hour moving average briefly on Thursday's trade and on Wednesday's trade. On Tuesday's trade last week, the market found sellers, as did we find sellers against the levels here and also way up here. So there is some reluctance to move above the falling 100-hour moving average, which would be a key barometer for the bulls if the price is to go higher. Otherwise, staying below keeps the bearish bias alive in that currency pair. Dollar versus Canada. I bring this up because we moved above the 200-hour moving average and closed above the 200-hour moving average for a number of bars here today. The last time that did that was way back here on July 15th. So that was a key break. Admittedly, we traded above and below the level here, and we're also trading above and below the level in more recent hourly bars, but the price is trying to hold support against that level. If we're able to stay above the 200-hour moving average and start to build more momentum to the upside, we could see further a move toward this swing area through here near the 129 level, and then start to look up toward the 38.2% retracement of the move down from the July 14th high. That level comes in at 129.41, but watch, the key barometer is going to be the 200-hour moving average. Finally, let's take a look at the Aussie versus US dollar. As I mentioned, the Reserve Bank of Australia did increase rates by 50 basis points and had a more dovish statement, if you will, that sent the price sharply to the downside, falling below the 100-hour moving average. We held it yesterday, Friday, volatility, and had some other incidents below the 100-hour moving average through here. But the move to the downside on Friday during that volatility came to the 38.2% retracement, and that's where we've moved back to or down toward in the trading today. Found early buyers. Not only did we find support against that level on Friday, but we also found support against it on Wednesday through here. So it's a key barometer, key level on the downside for the Aussie versus US dollar. On the top side, stay below the trend line, broken trend line, also below the 200-hour moving average coming in at 0.6957, keeps the bears more in control. So there you have it, a run through a lot of different currency pairs today. My name is Greg Michaelowski. Good fortune to trading. Bye-bye now.